Everyone, this is Matt with the Fundamental Investing Institute. Thank you for tuning in today. We're going to keep on the topic of SMB acquisitions and continue to go through some of the terminology and the concepts that we use in that world. So one of the terms that we hear a lot is searcher, and we're going to talk a little bit about that today. Now, in the SMB acquisition world, it's a lot like commercial real estate or stock investing. It sort of has its own language. And I know in some of the past videos, we talked about SMB, which stands for small to medium-sized business, ETA, which stands for entrepreneurship through acquisition. We talked about SDE, seller discretionary earnings. So there's a lot of terminology that we hear, and when you listen to these podcasts or read the books, the blogs, whatever, on SMB acquisitions, we get a lot of these terms and they're always defined. So one of the basic terms that we hear a lot is just the term searcher. And a searcher in general means anyone who is actively in the market to buy a business. But there's two basic types of searchers. One is a self-funded searcher. So that's the type of searchers that we like to work with. Those are individuals who are looking to buy a business and they are not bringing or partnering with institutional equity capital. So usually they're using their own money. They might have some investors, but they're usually family, friends, possibly private investors. And then they're usually funding the majority of the purchase with an SBA loan. In that world, they're not partnering with a private equity firm. And then you have what are called traditional search funds or traditional searchers. And those are people looking to buy a business. Very often they're students at business schools who are partnering with a search fund. A search fund is kind of a private equity type fund, and the search fund comes in, they pay for the searcher to go out and find a business and then become an equity partner in that acquisition. Now, like a lot of private equity firms, they're looking to exit the investment usually in 5 to 7 years. So there are some constraints, and they're usually, those traditional search fund deals are usually a little bit larger than what we see with the self-funded searchers. So we're going to end there today. In future videos, we'll talk a little bit more about some other topics in the SMB acquisition world. Thank you for tuning in. We'll see you next time.